We're covering NVIDIA. It's a fun topic on a day like this. And actually, we could turn this into the NVIDIA show if we really wanted to. But I looked at your charts, and one thing comes out to me, and that is powerful that NVIDIA has going on right now. Give us your interpretation of the Likefolio data.
You know, whenever we look at NVIDIA, and I feel like we've been saying this for some time, this company is best of breed in its space, but it's also best of breed just among innovators, even outside of when you think of AI. You know, whenever we look at different tailwinds, it's almost a matter of, you know, pick your favorite tailwind for NVIDIA. Is it autonomous driving? Is it robotics? Is it, you know, this massive transition of data centers into this advanced computing, what they call AI factories? I think this is driving a lot of interest in NVIDIA and its technology. And honestly, from what we're seeing, it's that demand is so high, we're not sure NVIDIA can even keep up. And so I think that that is the story. It's a great spot to be if you're NVIDIA. And this, you know, whenever we break this down for leaders, you know, I think AMD could be a close or a second place, but I'm not sure that it's even close to NVIDIA, and we're still bullish on AMD. So I think that, you know, whenever we look at NVIDIA right now, we see it trading, I think it's down over 20% from June highs. You know, whenever we see pullbacks like this, historically, these are gifts to long-term investors.
Is the AI bubble about to burst? In an age where technology reigns supreme and artificial intelligence, AI, is the crown jewel, it's increasingly clear that not all that glitters is gold. The S&P 500 index's outstanding performance year-to-date owes much of its gains to mega-cap technology companies such as Nvidia and Microsoft. These titans have been soaring, capturing headlines and investor interest alike. However, a storm may be brewing for smaller players in the AI sector who are facing extraordinary financial struggles. Amid these turbulent times, many of these underperformers are making grandiose investments in AI with little to no profitability in sight. So, before the AI momentum eventually decelerates, it's time to reevaluate your portfolio. Snapchat, BigBear.ai, and SoundHound AI are among the top names to scrutinize closely, especially given their current overvalued statuses. Let's answer this question, but first, if you want to keep up with the stock's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's turn now to a big story here this week. We're taking a closer look at the tech trade. Nvidia is the next big test for the market when you take into account earnings. But as it stands right now, you got to look at the moves that we've seen in Nvidia today and this week. Taking a look at today's moves, you're looking at another day of losses off nearly 7%. As it stands right now, when you take a look at tech overall, the NASDAQ 100 is down more than 5% this month, meaning that August is already tracking for the worst month of the year. And we're only in day 2 of the trading day here for the month of August. So here to discuss what's ahead for tech, we want to bring in Ayoka Yoshioka, Senior Portfolio Manager at Wealth Enhancement Group. It's great to have you, Ayoka, and thanks so much for taking the time to join us here this morning. I'm curious, we can start with NVIDIA because that certainly has been a wild, volatile ride here this week. I think the initial read on some of these big tech earnings reports was that the spending that's planned here for AI, that is actually viewed very positively here for names like NVIDIA. But since then, we've seen some selling action. So I'm curious what your big takeaway from this week's crazy week that has been is so far.
It's been definitely a much more volatile week than we are used to in markets. But we, started, I think, July with the VIX at 12. And so, perhaps markets were a little bit complacent, going into earnings season here. And so, now that we've had a good look at many of the tech earnings, we did see that spend and most likely going to NVIDIA for their GPUs. However, sentiment and the earnings bar was very high going into earnings season. And I think you're seeing a lot of that sort of come out just because expectations were very high. And the reports were okay, but nothing great.
The case of Snapchat is like the high school jock who peaked too early. Back in the 2010s, Snapchat experienced rapid user growth, riding high on the novelty of its ephemeral messaging feature. However, times have changed, and so has the competitive landscape. With the likes of TikTok and Meta platforms emerging as veritable juggernauts, Snapchat's growth prospects are facing substantial headwinds. The company's advertising business struggled intensely in 2023, dragging its earnings and cash flow down with it. According to their fiscal year 2023 data, Snapchat reported a loss from operations totaling a breathtaking $1.32 billion. While daily active users, DAUs, did rise 10% year-over-year to 414 million, these gains did little to mask the financial carnage. The stock has become emblematic of a company trying to leverage AI and augmented reality investments without a solid financial cushion to fall back on. It's like trying to build a skyscraper on a shaky foundation bound to tilt sooner or later. Analysts and company insiders have pointed out that Snapchat Plus, their premium service, is slowly gaining traction. But herein lies the problem. This growth is not fast enough to offset the revenue plunge from declining advertisement sales. Given the stiff competition from financially robust counterparts, Snapchat's AI aspirations resemble a game of high-stakes poker, a gamble where the house might just win. BigBear.ai's situation is like watching the Titanic head straight for the iceberg. This firm boasts an impressive array of AI-driven solutions, but has shown disappointing financial performance. After witnessing its stock price surge in February, driven by speculative investors, BigBear.ai failed to convert its momentary success into sustainable profits. Wall Street traders were elated for a brief period, driving the stock price to triple its value. However, the maddening run was short-lived. BigBear.ai indeed holds several high-profile intelligence contracts with the U.S. Army, which saw its stock surge momentarily. Despite these prestigious partnerships, the company has faced horrendous operational execution and a terrifyingly high cash burn rate. In its last quarterly financial report, revenue declined by 21% year-over-year to $33.12 million. More worryingly, the loss from operations hit a staggering $125 million, with only $81.4 million in cash on hand. When looking at the big picture, BigBear.ai faces fierce competition from established players like Palantir. Palantir, with its more robust financial footing, casts a long shadow over BigBear.ai. The market's current emphasis on earnings growth makes BBAI stock an even riskier proposition, underlining its overvalued status. But that's not everything, so let's keep rolling. Hello everyone, and welcome back to Investocracy.
Nvidia shares climbing higher once again today. The stock soared yesterday, adding $327 billion to its market cap. It was driven higher by strong results from competitor AMD. Now, despite the recent rally, though, Nvidia shares are still sitting roughly 13% below their all-time high. Joining us now for where Nvidia and some of its competitors are headed, we want to bring in Stacy Raskin. He's Bernstein's managing director and senior analyst. Stacy, it's great to talk to you again. So it looks like a lot of that excitement has now returned. I'm curious, do you think there's been just this shift in sentiment following the AMD's results that we got yesterday?
So I don't actually think it was about AMD's results. I think it's about the CapEx guides we're seeing from lots of the hyperscalers, Microsoft and Meta and Google. All of those CapEx outlooks look very supportive, like we're starting to see those numbers continue to go up. And I think that's what's been driving the AI trade. I actually don't think really it was AMD's results. AMD's results were not bad necessarily. They took their own AI guidance up a little bit, but I don't think they took it up any more than people thought they were going to. I don't think it was above where people thought.
Whispers in the wind. Last but not least, SoundHound AI represents another cautionary tale in the AI sector. Better known for its voice AI and speech recognition capabilities, SoundHound was launched nearly 2 decades ago with much fanfare. Its offerings, ranging from natural language understanding, NLU, to sound recognition, have found uses across various industries including hospitality and automotive. Despite this impressive portfolio, SoundHound AI's stock pricing has reached dizzying heights in 2024, more than doubling this year alone. This meteoric rise should serve as a red flag to investors. Currently boasting a valuation of $1.7 billion, the company remains unprofitable and is up against some of the fiercest competition imaginable, from giants like Amazon and Alphabet. Further poking holes in its lofty valuations is Nvidia's tiny 0.6% stake in the company, an interest that's far from reassuring. Until SoundHound can show some semblance of profitability, it's a risky bet at best. Analyzing the numbers and predictions. A deep dive into these companies' finances and market sentiment lays bare the reality that these stocks are teetering on the edge. According to industry analysts, the expectation is for earnings growth to play a more crucial role in the latter half of 2024. The significant valuation discrepancies between the stock prices and actual financial performance will become increasingly evident, urging investors to reconsider their stakes. Take the S&P 500 index, for example. Dominated by heavy hitters like Nvidia and Microsoft, the index's performance illustrates a resilient front. However, the smaller fry like Snapchat, BigBear.ai, and SoundHound are glorified cautionary tales that should encourage a much-needed reevaluation of investment strategies. So what's the best thing for you to do as an investor? Let's tackle this. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The high multiples on some of these AI names like Nvidia, one of the reasons my next guest just trimmed his exposure, although he does believe in the AI growth story long term. Let's speak with Steve Auth. He's Chief Investment Officer of Equities at Federated Hermes. Steve, it's great to see. Wow, look at Nvidia down 7. Now it's at 108. And you were on this a couple of weeks ago. So walk us through the thought process.
Well, no, it's a great company, Nvidia, Kelly. It just had become too much of a momentum story for us. Made an awful lot of money on it, stock trading at 40 times earnings. And I think we're kind of in a digestion mode here for AI. And importantly, stocks like Nvidia, once they become big momentum stories like that, they just don't need solid earnings growth and order growth, which I know a lot of bulls like to talk about, but they need accelerating order growth, accelerating earnings growth. And we're kind of past the acceleration mode here, So at the same time, we're entering the rate cut cycle. I mean, today's news only, cast the final die on that one. So off we go. We've got probably 200 basis points of rate cuts in front of us. These big AI names have done really well when they were the only game in town with rates up at 10% on the 10-year. They don't really need funding, so financing is not important. But the other side of the market that mostly funds itself short, the value stocks, the cyclicals, the small caps, they're the real beneficiaries once rates start to decline. So that's kind of where we want to be right now. And we thought it was time to take some chips off the table on the other side.
Time to recalibrate your investments. As the curtain starts to fall on the AI-driven market euphoria, it's prudent to scrutinize where to place one's bets. Snapchat, BigBear.ai, and SoundHound AI each present a compelling case for re-evaluation. Given their financial struggles, fierce competition, and questionable scalability, these stocks are high-risk choices that warrant a cautious approach. With the S&P 500 index drawing strength from technology behemoth like Nvidia and Microsoft, the fragile state of smaller AI stocks becomes glaringly obvious. To steer clear of disappointment, investors are better off reallocating their portfolios towards more robust and financially stable ventures. These overvalued AI stocks stand as a testament to the market's speculative nature and underscore the importance of careful investment decisions. What's your take on these overvalued AI stocks? Are you pulling the plug, or do you believe in their long-term potential? Share your thoughts and engage in this crucial discussion. The future of your investments might just depend on it. If you would like to know what big tech companies have been up to these past few days, go ahead and click on the next video on your screen. See you there.